Hello, hello, yes.
Good afternoon, all. We wanted high chairs not because we're so vain and we want to look down on you, but simply because we thought that our voices will be louder and then we can have a conversation together. I have the privilege of interviewing Jed, and I didn't know Jed, so we have known each other recently, and we like each other. I think we like each other because of philosophies and values and ways of thinking around and questioning the things that we see in the world. And what is interesting tonight that I would like us to rally around is Jed has written a book, and he's written a book about the purpose of capital. In our program, we have said we'll be amplifying abundance in Africa on human capital, entrepreneurship, innovation, and in investment. And hidden under that investment is also financial capital. And so the focus this time is going to be on financial capital, because Jed's book is about financial capital. I was interested in it because Jed addresses the issues of impact investment, and the impact investment is an inward, and impact investment is something that in Africa too is what you hear as on the blurb of the books that are being sold and escorting the concepts and the work that is being done in Africa. So I want to see if we can unfold some thinking, some understanding about impact, about capitalism, impact investment through the eyes of Jed and through the analysis of Jed. So Jed, thank you for the opportunity to interview you.
Thank you so much. It's really great to be here.
So first, I just want to know, why are you so personally invested in the topic of capital and impact investing?
Well, I think what Almaz did not say is that our parents, my mom was a social worker and my dad was a minister. And so I think in some ways I was bred to do community work. And I started the first part of my career actually as a social worker. I was the founding director of the Larkin Street Youth Center in San Francisco. And all I wanted to do when I was in my teens and 20s was run a nonprofit and change the world. And as I went through that experience, I became very frustrated with the traditional way to think about philanthropy and nonprofit management. And I realized that capital in the nonprofit sector moves on the basis of politics, perception, and persuasion, and not performance. And this was more true in some ways, maybe 30 years ago. I'm going to be 60 in March, so not representing the younger contingent here at the conference. But I think that I really reached a point where I became very disillusioned with the traditional avenues that were presented to me as the way to go out and change the world. And so not really knowing what I was going to do, I did a kind of a lateral exit off of my career track, and through a variety of things ended up meeting a financier who actually had come to a similar conclusion, but from the other side. He was a multi-billionaire and was very frustrated that all the avenues that were presented to him for him to be able to, quote, do good, were philanthropic and charitable. And yet the way that he had made his wealth was through free enterprise and markets and through capitalism. And so his challenge to me in 1989 was, could we think about how do you engage in philanthropic practice as a way to apply business to advance community social change? And so we began working together at that time, and we started a fund that basically took philanthropic capital, invested it in market-facing companies that were owned by nonprofits to provide transitional employment to formerly homeless people in the Bay Area. So we were right in the middle of this kind of question. And that led to a period of time where I spent about a decade working with private equity, public equity, family offices, all exploring how do you use capital to do more than just make money. And the last 10 years I've spent working with a group of family offices that were represented and managed by families that wanted to invest for both financial performance of different levels together with defined and measurable social and environmental impact. And all of this has come together. It's been so exciting. And I kind of woke up about 3 years ago, and I listened to the conversations that people were having about investing for development, about investing for change, about investing for impact. And I feel like what's happened is that all of our discussions have devolved to questions of strategy and tactics, to the how of capital, to the question of what's the right fee structure, what's the right firm, what's the right investment strategy. And what I realized was that, and I was a part of this whole process, obviously, but I realized that people are having problems understanding the how because we all blow by the why. And we all think we're on the same page in terms of what we're trying to do. And then we get into the meetings and we're deploying capital and we're allocating literally billions of dollars around the world. And we look at each other and we say, the world hasn't really changed very much. We haven't really seen the impact that's there. And as I step back from that experience, I realized that I had lost sight of the purpose. And what is it that we're really trying to do, number one? And number two, how did we get to this place to begin with, where you could think about economics as separate and apart from social and environmental factors? Like, none of us live that way, right? We're all fully present in our bodies, in ourselves, in our communities. We understand when we walk out that we have to breathe the air. We walk on grass. We understand that we want our children to be healthy and smart and fulfilled. These are not economic elements, and yet all of our conversations are around how much do you make, how much money do you invest, what's your financial return, how much is enough for you? And so I just wanted to stop and take some time and reflect on the question of purpose.
So you have been reflecting on the question of the why, and I could see that you are so disillusioned with the how, and you are so invested in the why. Can you speak about the why now?
Well, so here's the thing. So I wrote this 340-page book on the purpose of capital and the why, and I offer no answer for the purpose of capital or the why. Just so you're clear. I can tell you should read the book. That's true, because I pushed him to say after reading the book, you wanted the why, but you didn't convince me. And so I think that, and let me just also say right up front, this is not just a 45-minute shill for the book. The book is free. You can get free copies of the ebook at the book's website, which is purposeofcapital.org, and the hard and paperback copies on Amazon are priced at cost. Books are not, it's the idea. It's shifting the conversation. It's trying to engage all of us in a different way to approach what this is all about. And so the purpose element of it, I think we come into this conversation assuming that what we've been taught is correct, and that the purpose of capital is to seek its highest and best use. That's what we used to teach at business schools, was that the purpose of capital is, given a certain risk and financial return and liquidity lockup, you should get a certain amount of money back. And that's the purpose of capital, is to make more capital, right? We all know that. Shareholder primacy, I'm an investor, you have to meet my return expectations, right? This is the purpose of capital. But it's a lie. Because what they don't tell you is that the purpose of capital, as we understand it, is simply a social construct. It's simply the legacy of a set of operating assumptions that people have functioned within for the last, let's say, 75 years, if we're talking about financial capitalism, and more broadly, probably 400 years, if we're talking about capitalism as a broader kind of economic model. But the point is, every generation has the possibility to redefine, reconceptualize, to re-understand what the purpose of capital really is, what we are called to be as economic actors in the world, and how we can move capital to create more than simply more money. How's that?
I have to tell you a Ghanaian story. So some economists from the West came to Ghana, the coast, and the fishermen were relaxing after they had fished, and the fish has been taken to the market by the women. And the economists from the West asked these men, So why are you doing? Why can't you go back to the sea and fish some more? Why are you lying there? And they said, you fish some more. Ask them why. So you can get more money. And then when we get more money, what shall we do with it? So you can have more things and you can take holidays. And they asked him, what shall we do at the holidays? You will go to the beach. And they said, we're at the beach.
And so, but I think it's a great story because it really represents the cultural context within which we assume what capital's purpose is. And I think especially when we talk about how we use capital to create a better world, it's a very interesting kind of conversation because we're talking about using a system that is based on extracting value from individuals and communities and countries. And that has, in fact, brought us to where we are today, where we need to have a different way to do capital because we have great need around the world, both environmentally and socially. And yet we're using that same system and assuming that that operating system will work in the context of what we're trying to apply it to today and for the future. And so we actually have this moment where we can reflect while we're sitting on the beach and say, why are we fishing?
Yeah. So one of what kept me reading your book was the fact that you wrote a book which is supposed to be about economic, but using a lot of vocabulary and concepts from religion and from philosophy and from everyday life. And in it, the intention was to create a new vision for a new economic future, shifting the conversation into the right places. Could you tell us a little bit where you're coming from and where you think, how you think you can influence greater masses, not to be, shall I say, overly focused in one way, but really to see this a holistic way in which people live, that people are religious, that people are cultural, that people are whatever else that you included, philosophical.
Well, again, I think we forget. Every generation has the danger of assuming that we are the pinnacle of development and evolution. We are better looking, more clever, and we'll be wealthier than our parents. And oftentimes in America, we've been lucky enough that that has been the case. And that comes with a set of blinders. We forget that Adam Smith was, before a celebrated economist, a moral philosopher. His largest selling book at the time was the Moral Sentiments book that he wrote. We forget that there was a day when people thought about economics in the Greek sense of providing for the household, not in the Chicago School of Economics sense of optimizing financial return to shareholders. We forget that there are cultures all over the world that understand the place, role, and function of capital as in service to community, not community in service to capital. These are assumptions that we are basically embracing, and we have the opportunity to redefine them as we go forward in order to really meet our needs as investors, as stakeholders, as community, and as planet.
So let's focus investing in Africa today, because our focus is really looking in Africa. What are your thoughts? What could we do different? This morning, we spent quite some time hearing what the situation is and what is happening. What did you hear that makes you reflect both on what you're thinking about in the book and the reality of what we are practicing as people investing in Africa, investing our time, our talent, and our treasures in Africa?
I think what I was most struck by was the panel that was talking about the current state and future prospects of investment in Africa, where the focus was really on regulatory issues, investment practices, investment opportunity, and I felt like it was a discussion that was largely ahistorical. It was not reflecting on the experience of economics in Africa. It was not reflecting on the purpose of this capital. It was reflecting on what the investor needs in order to meet his or her needs as an investor. And I think Martin Luther King talked about the danger of having guided missiles and misguided men. And the problem is that at business schools, we were training a whole class, we have been for 30, 50 years, a whole class of managers who know how to execute business strategy and have no idea why the hell we're executing the strategy. You know, the gentleman, Jim, from, I think it was Price Waterhouse, something like that, it talked about his, 7 Ps, and the first P was purpose, right? Which was great. And I thought, okay, we're going to get right into it. But the purpose was to make as much money as you could for the firm. There was no real conversation about deeper meaning of purpose. And so we all get trapped in this conversation. And so whether you're the fiduciary of capital and you're given a set of marching orders for what it means to be a responsible fiduciary, or you inherit wealth and you're told what it means to be a responsible fiduciary, or you create wealth and you're told what it means to invest that, we need to step back and pause and reflect, not on the tool. We're very good at tools. We're not as good at task. We're not as good at what are we ultimately trying to do here. And you think about archaeologists who study the evolution of human development, and they celebrate our tool-making ability. They say this is what separates us from the animals. And I would argue, as others have as well, that it's less a question of our being able to create the tool than to create a culture and a community that gives us the potential to create tools. And that those tools have their greatest meaning and are actualized, if you will, in application of creating the world that we seek to create and that we want to live in. And that's the point. It's not that we're so clever that we can create the tool, it's that we have the genius to see what the possibilities could be of what we could create together in that process.
So when I hear that, I seem to think that you are sort of persuading us to think about the question of how could we make capital serve us, and you think we are saying we're serving capital. Yes. Could you say that?
Yes.
Yes. So I come from the Global Fund for Women, as you heard, and so our focus is on the welfare of women and girls, not because they are the only ones who need attention, but so as to bring the society at par. I believe that the best investments, or we will not succeed in creating good capitalism until women and girls, until gender equality is achieved. This is something that you don't at all address in your book. And so I have a bone to pick with you on that. So can you defend yourself?
Against you? Never. I don't think that's not going to happen. So I think the thing to keep in mind in terms of what I tried to do in the book was try to unwrap an understanding of how we got here and to try to reconnect us with these deeper questions of meaning and purpose and value. And I say nothing about anything that's really happened in the last 50 years around innovative approaches to apply capital, to deploy capital, because a lot of the other books that this is my 8th book, and the 7 other books have all been like cases and examples and profiling successful social entrepreneurs and market rate investors who did well and good, all that kind of thing. What I tried to do in this book was to say, I'm not going to talk about the solutions or the answers of the strategy. I want to tee up the fundamental questions of consideration, and then I will turn to you and others and say, look, we actually know how to do this. We know how to think about this. I gave a talk at Davos 10 years ago on some of these related topics about blended value and the nature of what it is we should be called to create as business people and as investors. And a gentleman stood up at the end of the talk, as they always do at Davos, and they never ask a question. They always have a statement, right? And this gentleman's statement was, everything you say is correct. I totally accept it, and there's nothing new about this because this is how we have run our family business for the last 140 years. And so I think that all I'm doing is saying there are a whole bunch of solutions out there that we could explore, but first we have to understand, what are we really trying to be about? What are we trying to explore? And part of our problem today is with TED Talks, with blogs, with PowerPoint, everybody has a solution, and all we're doing is focused on answers and competing and posturing from a position of our solution versus your solution, when in fact, The solutions, I would argue, are going to come out of dialogue and conversation between and amongst each of us as we bring our perspectives forward and weave them together in order to see better how we can move forward together.
So that's a good place. We thought for this session, we might invite that conversation to come also from all of you. And that's partially why we sat on this, so we could see whose hand is up. But we'd like to invite you at this moment, if you would like to give an input, ask a question.
I can see a lot of nodding heads. Everybody's like, no, no questions. We all completely agree. So we have some microphones here. Do you want to?
Okay, it's on now. Yeah. So Jed, I want to ask you this question. It's a burning question to me. You know, the work I've done with Step Up Silicon Valley. So the whole notion that Silicon Valley is one of the richest regions in the world, and yet 18 to 25 people, members of the population cannot make ends meet. So this is one of the richest region. And then we have guests here that came from Nigeria, Senegal, and other parts of Africa. Whenever I go to Africa, there's this question, oh, you live in Silicon Valley, you must be really rich, or maybe these are very, very wealthy people. I just want to put that perspective that when I talk about what you're saying, Jed, resonates with me because of the work I do too, or I did for a long time, and now through the ADN lens, but through the Silicon Valley lens, the lowest income in Silicon Valley on the national poverty level, a family that makes $24,400 per year is considered poor. That's national. In Silicon Valley, it has reached almost $106,000 in order to make ends meet. Housing is very expensive. Inequality is so wide. Income gap is growing so rapidly. I just wonder what the society would look like if we continue to see this trend, because the haves and the have-nots has increased so dramatically. So on the purpose of capital, for me, what you're saying is, what is the capital can do for me rather than what you're going to do for me? When I give you money, what impact are you going to make? Well, that's okay, that's fine. You can ask that question, which then, what is the capital doing to this community? Because most of the money within Silicon Valley is actually pretty much circulating in a very small radius between Palo Alto and probably Menlo Park and Sunnyvale, or maybe even San Jose in that. So it's a very small radius that pretty much owns so much, and yet so many people are getting hungry. Some people cannot make ends meet. They go to food pantry to make something for their family. So maybe if you could just put some perspective from the Western, then go to Africa from there, so that would be very helpful.
I think I would turn your observation. I don't know that capital is circulating from San Jose to San Mateo. That capital has left. That capital is circulating the globe. It is monetized in the form of digits that we never even see. It wraps us right now. And this is the outcome of the separation of self from other. This is the outcome of our viewing ourselves as unique and separate from all else. This is the outcome of we create ideologies then that can support and justify what we're doing. So we call ourselves libertarian, which is a very popular kind of philosophy in Silicon Valley. And we say, I remember one cashed out, I think 20 or maybe early 30-year-old tech person, billionaire, said, I never really wanted to give back because I never felt I took anything. And I think that this is the reality of having 25-year-old white men who create the operating systems that we all then have to be held accountable to and that define our world. And this is the challenge of artificial technology, is that we are in essence surrendering our data, I mean literally the operating systems of our lives, to a higher kind of cloud-based platform that's been designed by people who are not thinking about the moral implications of the structures and the digits that they're kind of driving through the world. And because of that, we are all going to be stripped of our power, authority, our agency, our self-determination, and we will again be in service to systems as opposed to having systems serve us. And this is why I celebrate technology. I'm not like a Luddite. And I celebrate the culture and communities that made it possible for technology to be advanced. And I celebrate those entrepreneurs who are looking at how do you take technology and turn it toward more than simply a better app to order pizza. That in fact, we have the tools to create the world that we aspire to. And we forget that. And yet we surrender our power and authority to others in the name of being able to exchange photos with my wife, right? And so I'm saying we need to step back from all of this and really fundamentally reconsider, why are we here, right? Because we get so wrapped up in the game, we kind of forget that we're going to die. And we're going to die sooner rather than later if you're above a certain age. I mean, Almaz talked about my father passing this September. My mom passed like 7 years ago. We are now the elders of our family, which is kind of scary if you think about that. But I think that you have to be at a point in life. You either get it experientially. You know, Jason Spindler was mentioned earlier, who spent his life in finance and was coming up out of the subways when 9/11 happened and the tower fell. And he spent then the next hours covered in dust, pulling people out and helping people get away. And that was his moment. And he said, I'm going to dedicate my life to figuring out how to use finance to create opportunity in Africa. So he was the co-founder of iDev, and as was mentioned earlier, he was murdered 2 weeks ago in Nairobi. I worked with street kids. They died every day. Like their time came, and boom, they got AIDS, they got shot, they got beat up by a trick, whatever it is. You never know when your time is going to come. And the point is, if you sit with that reality, then the question of how much is enough is actually pretty easy to answer. The question of what kind of financial return are you really looking for is pretty easy to answer. And the aperture opens up. You begin to see that, well, there's an economic lens that gives you a discipline to how you manage capital, but the perspective that you have about the nature of the value you create is much greater than the economic piece. And in fact, if you focus on the economic piece, you're going to miss a whole host of other elements and opportunities to create value with your capital. And sometimes you give up a little money, sometimes you make more money. It comes and goes in different ways. But it's all around this notion of reconceptualizing the purpose, the fundamental nature of the value you're creating and the purpose of the capital you deploy. We each have that opportunity. We have that opportunity as wealth holders, as wealth managers, as entrepreneurs, as activists, as social workers, as political people. I mean, we have this great, great opportunity, and we are letting ourselves have a smaller and smaller and smaller world. We're letting people make us fearful of each other. And that is wrong on so many levels, but just for this conversation, it's wrong on the level of what will need to happen for Africa to be able to move forward as a continent in the way that it should, and that it has every right and passion to be able to do.
I know how some truthful conversations can become difficult conversations. So I just want to put a light touch to it and say, this is true and really good to think about. And if you feel you have something different to say, don't be afraid to say something different. Yes, you have a microphone. You have the power.
Hi, my name is Margaret Nyamombo. I live in San Francisco. I have a coffee company called Kahawa T93. So we source coffee from farmers in Kenya, and we roast it and sell it in San Francisco. So I've spent the last year doing this. Before that, I worked on Wall Street, did the MBA, all of that. And so my question is essentially, I'm focusing on the other extreme. So we've been talking a lot about the extreme of too much wealth. I wanted to look at the other extreme, which is too little. And so in my experience within the coffee supply chain, which I think everyone knows, coffee farmers are the most exploited producers in the world. That's why we drink fair trade coffee. But I think the more time I spend within the coffee supply chain, which is actually representative of society, because coffee is the most traded commodity after oil, so it's very representative of our society. And I think when you look at coffee and you look at the farmers, the issue is we don't want to pay what it costs to produce coffee. And I think we found ways within capitalism to justify not paying. And part of that is using using free trade, right? And so I was just curious so when we talk about Africa, we can pour a lot of money into it, but we come back to this question of, are we willing to pay for that labor? I was just curious whether you had reflected on that side.
Sure. Well, and we wanted to take two questions, but before we go to the next gentleman, I really have to just respond. So, yes, and we are paying, okay? The issue is who pays. And the fact is, the people who are paying are the local farmers, the shareholder farmers. They are paying with their life, with their energy, with their passion for what they're doing. The trick is we're not paying appropriately for that. So somebody is paying, but it's just not the right somebody. And I think that when we talk about modern capitalism, there are so many subsidies built into so many systems that are really, and again, I know this is politically charged for a 59-year-old white guy who's only been to Africa like 3 times to say, but I think these systems are the legacy of colonial practice, right? This is it, right? So when I listen to people talk about economic development in emerging markets, I'm kind of like, all right, well, are all we doing is, what we're going to do is make capitalism safe for itself, or are we talking about using capital to really as a fuel for freedom of communities and individuals and entrepreneurs to really create a better world? If it's simply to expand and make capital more defensible all over the world, I'm not that interested, really. I'm just not. It's like, it's all good. And I realize that's part of the game and the nature of the reality. But we need to have people pay the fair cost of what it is that they're participating in within these supply chains, and they need to be compensated at a level that's fair. I don't think that it's fair compensation that we continue to see higher and higher and higher concentration of wealth simply because the folks who have capital hire people who know how to run the system to be able to make them more money, and other folks are simply trying to get an education, have a house, have kids who are not sick. Something is just fundamentally wrong, and that's why I'm saying we need to have a different conversation. The conversation is not how do you open up emerging markets to external investment. The conversation is how do you reconceptualize the purpose and flow of capital to do more than simply replicate itself. So please, I'm sorry.
Thank you. Tony Lavoti, Monterey Bay International Trade Association, a nonprofit international trade association representing our easing world trade winds, which will write an article on this conference. Getting back to your purpose, and Jack Ma of Alibaba recently launched the e-world trade portal in Rwanda as the first country in the African continent. His reasons were because of his president and the climate of Rwanda as a model, and he wants to replicate that throughout the whole continent. And he said, Rwanda is the future of the African continent. That's what he said. He quoted those exact words. I like to take it one step further, in that Africa is the future of our planet. And let me explain my reasoning behind that. In my business, I've noticed that the best technologies that we can generate in this country, we're an innovation center here, usually are launched someplace else. It's very difficult to be launched here because of various challenges, good old boy networks, regulations, politics, et cetera. So a lot of these new technologies in transportation, energy, whatever, are being launched now in different parts of Africa because they want it and they can leapfrog from, let's say, a 19th century right to the 21st century. So when I make this statement, I think Africa is the future of our planet, I think Africa's at a crossroads right now. Do they follow the 20th century model that has brought us to this date of degradation of our planet, looking at 12 years from now, potential catastrophes, as some scientists say? Or do they follow a new model of a 21st century infrastructure, not a 20th century infrastructure? So Africa sits on all this beautiful undeveloped land. So how do the African countries prosper and grow their population? Do they do it the 20th century way? China's investing a lot, mining, et cetera, kind of taking all the minerals out of Africa, not all the minerals, but doing it that way, which is kind of the old way of thinking? Or do they say, look, instead of seeing how many dollars we can get in our bank account, let's look at the quality of life that we can have for our people by adopting new 21st century technologies. And instead of looking at land and saying, oh, how many condominiums and how many grids and things can we split up to make a high profit, how can we live in harmony with nature in a very positive way in a 21st century infrastructure and go for quality of life rather than for how many zeros in your bank account? And I think that's where Africa stands right now. I think it really is at crossroads. Do they go the old way or do they go a new way? And I think the new way is what you're saying, more of the purpose.
And if I could just add one point to that, is that I think it's even better than that, because the opportunity isn't to take a model. The opportunity is to recognize that Africa is not, Africa. It is, X number of countries, all of which together can make choices about how they want to evolve, how they want to pursue, that are choices and decisions that are relevant for their culture, for their background, for their people, instead of saying there is one way to think about the nature of capital, and capitalism has to look like what we've been sold from, the Wall Street finance guys. But in fact, there's another way to conceptualize what capital is as a force, as an energy of liberation and power, as a way to create freedom, to fuel freedom for communities, to have these conversations. But we can't get there unless we first say, wow, we can define this. We can reconceptualize the nature and purpose of capital and wealth, and let's have that conversation as a community, as a nation, as a continent, and let's drive a different future for ourselves, and be able then to be positioned to at least better address some of these challenges that we're also aware of.
I think when you are talking when we are talking about issues such as what you are raising, you cannot put them in a geography. You cannot say Africa would do this, because it's no longer about Africa or Europe or anywhere. This is Africa in this place, because we have people here who come from Africa and who don't come from Africa, who influence what happens on that country, who influence what happens here, who influence what happens in the world. Now, if we don't find a global way of thinking in such a way that when we put our metrics, our standards for what we want to do, that it's flowing in the same direction, it's not going to work. I tell in one of the books, I begin with a story, which is an African story, in one of the books I published. And it's a story of a hyena who had a good smell of food, but it was coming from different directions. So I was told by my grandmother, and my grandmother said that the hyena couldn't make up where to go, so he just put their feet until they started to tear apart. Here, what do I mean by that? I mean standards that are set for achievement of development, for achievement of progress, for achievement of good health, become universal quite quickly, and everybody strives to be that. We in Africa are going to strive to to be technologically literate and do it the way other people are doing it, if not better. So if technology was harming us, but that's where the metrics for success are, we are going to be yearning for the metrics for success. But if we together globally understand and say we're going to set up human metrics which you apply no matter where you are, those are metrics that respond to justice issues, not just us. I think that's where we want to go. Thank you.
That was great. Thank you so much for that.
Hi, yes, Bill Scott with Nexus Consulting Group, based in Washington, D.C. I'm based out here in California, and my company was a member of the Silicon Valley Venture Capital Roundtable for about 5 years. And one of the things that I have noticed is that Silicon Valley VCs often talk about wanting to be green or invest more widely. The reality is very few of them are willing to fund startups in Nigeria or Ghana or any of the places where there's startup. And it seems to me that somehow that's one of the things that is needed in Africa is the flow of capital and of venture capital to get things moving. How can we address that?
Would somebody from the crowd who is dealing with flow of capital be interested to participate in this as well? We had some really good panelists this morning as well. Yeah. You're welcome to.
I can respond. I can't give you the answer because that would be wrong. I think that what we're asking is we're asking for folks with the expertise who understand these structures and processes, who have the experience with the best and brightest venture funds, come into this conversation, but not to do venture capital as traditionally conceived and executed. The idea within impact investing, which is kind of my space where I enter this conversation, the idea that we're taking fund structures that were designed and refined over the last 30, 50 years to take technology to market and to scale, and to do that in a massively profitable way, we're taking those exact models and saying that that's what's needed in order to expand, let's say, agriculture in Africa on a sustainable basis, or whatever the example would be. And what I think we're arguing for is the idea that there are disciplines, there are skills, there are techniques, but we need to create new and better approaches and platforms and assumptions to do that with. And my version of your frustration is when I sit on finance committees for families that say they want to be all in on an impact basis and they want to really assess performance and they want to fund innovation, right? How many times have you heard that? And then you get any structure that comes to the finance committee that doesn't conform with what they've already seen, or what, more importantly, their financial advisor can understand how to engage in due diligence around. And they say, well, this is really clever, this is really interesting, but we're really looking for a 7-year fund with 2 one-year extensions and a demonstrated track record of 15 to 20 years and blah, 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 right? And so somebody has got to break that logjam. And that's what I'm saying, is that we have to just stop and say, look, we're not pointing fingers, we're all complicit in all of this, right? Let's just give ourselves a break and go forward in a different way, take the best skills and techniques and practices and use them in the way that we're called to do today. And we have somebody at the back who really needs to get a microphone. So in any event, do you want to say something while we're waiting for? Okay.
The other people.
Yeah, over there we've got, I'm sorry, please.
Yeah, my question is that I've lived here. My name is Nana Sewa, and I'm from Ghana, West Africa. And I've been listening throughout the whole morning and this afternoon. And what I want to add to the conversation is the poverty, especially in the rural areas. I'm a queen mother, and I try my best to help in the villages. But when you meet people, as you say, and you need them to help to uplift, especially now we have areas where we have child trafficking and the women are being, because of poverty, they are being abused by the men and some of the women, both sides. And when you meet people and they want to invest, and then you tell them, is that they, as you say, they want you to prove to them what you need and what should be done. And the damage that is going on is going on. So I want to know, what can you do if you need somebody to really invest in the rural areas, not to have profit, but to invest in human beings? What can you do to convince that person to help?
So your experience is going into community, working with organizations that are addressing many of these types of challenges. Would you tell us what
Yes.
your thoughts are?
They are, first of all, that there is lots of funding that is supposed to be available to people such as the ones that you have described, both in governments. If you go to any government nowadays, and I travel also extensively on our own continent in Africa, and I find that they have got gender funds, and in some places, those funds even get unused at the end of the fiscal year. And the reason is that there isn't always mechanisms that transfer money from one place to the right place that has been budgeted for that. And then there are foreign monies as well that are giving us aid. And nowadays, a lot of aid money does have gender aspects attached to it. Again, it lacks translation. And then you have those mechanisms like the one that I lead as the CEO of the Global Fund for Women, where we are determined that we get money directly in the hands of women who are leading change in their own communities, rural, urban, slum, etc. And we've been doing it for 30 years. But these funds are small and tiny. And the brain, what I would see if the world was clever, the world would say something like, there are tools and mechanisms. Well, how can we find those tools and those people that have the ability to do it and support them well enough to do it? There are a lot of women's funds. You come from Ghana, you said the African Women's Development Fund is one of those that really reaches rural areas. And so these women's funds tools were specifically supposed to answer to what you were saying, because women often don't have the recognition that they deserve to have, so they are not seen and they are not heard in many places, and so they don't usually have access to the capital they need to do what they do. But I think that once you know it as an individual like yourself, then I think the next thing is for you to network with people like myself, and we find solutions together.
Well,
Yes.
the solutions come together, and also I just want to really call out that what you're describing is you're being personally present in the context of this situation, that you are engaged, and that's part of what this opportunity is about as well, is to work with folks who are doing this, bringing these programs forward, channeling this money in a different way, and not to simply say, I've written a check to the fund and my job is done. That actually, there's an opportunity that we all have to be more deeply engaged in that process. Now, we're getting signals on the time, and you've been waiting for a while, so maybe we could just go to one last comment in the back here. Yes, you with the red turtleneck, or a neck brace. I'm not sure.
I know you want to end, so I'll be very quick. So I just want to offer a perspective and a challenge. I was a Peace Corps volunteer in Sierra Leone way back, I won't tell you how long ago, because then it'll conflict with the lies I've been telling about my age. So, but I was a Silicon Valley corporate attorney working with high-tech startup and representing early stage companies and entrepreneurs and bringing them from startup to IPO, working with venture capitalists for 25 years. And then I went back to Sierra Leone, and it was a profound enough impression on me that I left the law firm that I had co-founded and became the founder of the Village Link, which is a 501c3. So excuse me if I'm a little lawyer nerdy, but I really think that there's some, when it comes to funding, we have to be really creative, I think, and look at we tend to look in silos on funding, but when you look at Africa, you have to take it, in my experience, in a whole different way. So we're in rural Sierra Leone, we're focused on the rural areas, and there's people are brilliant, but there's no cash flow there, right? So you can't use the same methodology as you do in venture here. So I think there has to be a way that people that are doing it, looking at structure. You have a 501c3 structure. They have to start talking to the venture capital structure people and everything in between, private equity, large corporations with corporate social responsibility, so that we actually blend. You're talking about blended things here, blending the structures to fit.
Yeah. Thank you very much, and we thank you all.
Thank
Thank
you.
you so much.